Welcome back, traders and investors. Our final guest of the day and our final guest of the week is Malte Kaub. He's managing director at the Traders Leadership Council in London. Malte, how you doing today?
I'm great. Thanks for having me on. How are you?
We're doing good here. First of all, tell us about the Traders Leadership Council and what kind of services you guys offer.
Yeah, thanks for asking. The Traders Leadership Council was really kind of driven when we had a conversation with professional traders, and we started to discuss the question, what's hard about trading? And we looked more closely to that question, worked on a study, and then formed the Traders Leadership Council, and now we're providing kind of education to traders, often via brokers. That we run their educational webinars and seminars, but also kind of provide direct education to the market.
Okay, and so you do that for traders. Now let's just move on to some topics here. And we had some big news out of the ECB yesterday.
Yeah.
Big drop in the euro and some relative strength there in the British pound. Just talk about quantitative easing in Europe, and do you think that's going to have the same desired effect that it had in the United States?
That's a very good question. I suppose quantitative easing was something that was early adopted by the US, and the Europeans, especially the continental Europeans, have been pretty hesitant, and it was more a matter of austerity. That was a kind of more popular view here in Europe. But I suppose that the fear that inflation would go through the roof in the US, that hasn't materialized. It also hasn't materialized here in Europe. I sit here in London. The Bank of England continue to do a certain amount of quantitative easing. Also here we don't see that inflation is going through the roof. So I suppose that and also the arrival of Mr. Draghi at the ECB has driven up the appetite to do everything that is needed to prop up the markets also in Europe. And now we've seen with Mario Draghi, probably with his arrival, we see a very different kind of behavior in the market. The central banks, the European Central Bank in particular, is much more active, and there's a stronger messaging to the market that, again, we will do everything what we can to stabilize that market, and that now includes what we would call quantitative easing. And we would even, like the latest kind of statements from Draghi indicate that he would also consider direct intervention into the market. So it almost feels like we would even go beyond what the Fed is doing to make sure that we support the European market. And I think that's what when you look at the Euro-US dollar yesterday, we had the biggest drop this year, the biggest one-day drop in the Euro-US dollar. I think that very much underlines the sentiment in the market that while the US is on the road to recovery, we here in Europe, we are on a very bumpy road, and we're pumping more money into the market, and we're seeing the effects. And I think if you then compare, you also mentioned the British pound. The British pound has been a bit lagging in that theme, because the more Cameron was talking about independence from European Union, I think the more maybe UK was seen as a little bit of a small Switzerland in a way. And also the UK is still a market with a very strong stock market, and we're very dividend driven here, and the economy is doing okay when you look at CPI and when you look at our gross domestic product. So I suppose that's why we've seen a shift in a way that while the euro has lost a lot of ground, I think when you look at the pound versus the US dollar, we're still until recently we've been on this 165, it's now 163, but still comparably we're on a higher levels, much higher levels compared to the US dollar than compared to the euro. So that's why currency traders find, when we look at value and stability, we probably find that more in the British pound. And the euro now is where we have a very clear theme, and that is pointing downwards. However, if I may just add one comment, sorry, I'm probably talking already too much. What I'm seeing when I look at the levels, when you look at euro, since it has started compared to the US dollar, we started at 0.8, and the high was then at 1.6, and now we are roughly in the middle with 1.29, and there's still some room to the downside, a few hundred pips to the downside before we really go into bearish territory. So that's probably my final comment here. At this point, the world is not over. I think we have seen that with the euro many times before. As long as we don't go below 1.20 or especially 1.18 in the euro US dollar, actually, I'm not too concerned. But right now, we're very clearly in bearish territory.
I mean, aren't you a little surprised by the move in the euro yesterday? I mean, this move by Draghi was pretty well telegraphed. Did you expect to see such a violent reaction in the euro? And then it looked like it had its initial whoosh down and then it consolidated. The traders that then missed the first down move maybe tried to pick along and then it flushed them out again. This move, like I said, was kind of well telegraphed. Are you surprised at the violent reaction in the euro?
To a degree, yes. I have to agree that, well, I've done some volatility analysis of the euro, just looking at it for the last couple of years, and a move like that's really not a move we see every month, not every quarter. That's an extraordinary move, and I'm sure that a lot of traders have been stopped out of their positions, hopefully so, because that means they applied good risk and money management. And I agree with you, the messages have been quite clear to the market. But I suppose, as always, there's a couple of different stories probably then coming on top of each other. There's also the market has reacted very nervously to the Ukraine situation, and I suppose any positive sign that came out of that recently probably just made that move also more pronounced, so more big macro factors that fell in line. I agree with you that the severity of the move has been extreme, and I think it's a very clear indicator that a lot of sizable trades have been stopped out in the market, probably accelerating the move even more. I think, again, as a reminder, especially for the retail traders, is you have to absolutely honor your stops, because otherwise, you trade well for a large amount of days or weeks, and then suddenly that oversized move comes, and we've seen that too many times that this actually then often wipes out many accounts. And probably one more comment here, and it's also the other guys I work with on Twitter. I think what we all realized is that volatility has gone very, very quiet in recent days and weeks. So we had some very, very boring. August was extremely low volatility month, even more than usual. So maybe there's also another reason that when a lot of traders just waited for the news to come out and then to put on their positions accordingly, and probably that again then exacerbated the moves that we've seen.
Why do you think they waited so long? I mean, you saw the fact that the QE, had on our stock markets and the supposed effect on our economy. What do you think took them so long? You think it was the resistance from Germany? What was the reason it took so long?
Yeah, definitely. When you look at, I think Germany is probably at the heart of that. That's absolutely right. And when you look at the Bundesbank, who is the German national central bank, and there have been huge debates by leading central bankers on how to react to what the US is doing. And in the run of that, we have lost one head of the German National Bank, Mr. Weber. He moved over to UBS, and he's still very highly critical of kind of what the National Bank is doing. And when you look at Mr. Weidmann, who's currently at the central bank, again, not a big fan of pumping money into the markets. And I think the German public also doesn't really favor that. The Germans are a nation of savers, right? And anything like pumping extraordinary amounts into the economy, it doesn't really go down well with voters in Germany. Maybe that was one driving factor. And I suppose even in the UK, when I think about what Cameron has said, and that was a time when he wanted to be elected, and there was a huge discussion about austerity and kind of navigating through that dip, through that recession by allowing massive cuts. So I think across Europe, that was also driven by Greece and all that, but the other conversations that we had that time, there was probably more focus on saving money than at kind of reacting to a crisis by spending more money, which typically makes more sense that you act anti-cyclical. I suppose if you sum it up, it probably was a highly political decision that has been taken in the past, but now we are in different territory, and Mario Draghi seems to be more a technician again and less political, and he seems to be more open to act like the US has done already for a prolonged time frame.
Oh, and so do you think that this move by the ECB, you think this maybe signal a little shift in the markets where the European markets will start to outperform the U.S. markets and assets will be shifted accordingly?
That's a that's a very good one. I suppose when you look at Europe, you always have to understand that Europe is a quite fragmented market, right? So you will always see kind of strong reactions when you invest in markets like Portugal or Greece. You will see massive swings. Also, Spain and Italy. We have traditionally in the last years we have seen a lot of volatility, especially in the financial services sector. When you look at Germany, the DAX playing around with the 10,000 points mark now for the fourth or the fifth time now. It's definitely showing an outperformance relatively to the other markets that we in continental Europe or in Europe, and the FTSE not really the UK index not really moving very fast compared to the other. So the point that I want to make is in terms of performance, you have to understand Europe as a fragmented market. And if you seek higher returns and you're willing to ride the volatility, then the most extreme level would probably go to Portuguese market, as they have outperformed other markets quite significantly as we had that up run. If you want to have a resilient, solid performance, probably have a look at the German markets, and you will probably have less downside, but also less volatility when you go to the UK. But please keep in mind that everything is kind of happening on. We're walking on very thin ice right now, and we have seen a very quick decline in the DAX, for example. The DAX, the German index, has fallen from above 10,000, it was 10,015 very quickly to 8,950 on the way down. I'm very open. I also got stopped out on one position where I bought into a technical level, took my loss, and now in new positions again. But that was quite violent move that we've seen there, and I think we will probably continue to see that increased volatility here for some months to come.
Okay, and let's just go into the Trader Leadership Council here, talking a little bit about, what they do there. And, a big part of your education and webinars is, focusing on psychology. And,
Yep.
what are some of the biggest problems for new traders when they're getting into the markets? Cycle. I mean, a lot of people go from simulated trading where wow, you're making money and everything.
Yep.
What are some of the problems that traders face when beginning, and how can they overcome them?
Yeah, absolutely. And so we did that study and discussed that in interviews with more than 50 professional traders. And by now I asked probably more than 1,000 retail traders also to give their input. And we continue to identify three main challenges. Number one being psychology, as you mentioned, the fear factor being the most difficult challenge. 74% of the people who responded to my survey mentioned that as number one. Number two, the challenge not having the right system, not really having a system that is tested, that has a positive expectancy. So we teach traders a lot what does that actually mean. And the third one, still with more than 50% of respondents, is struggling to execute a trading strategy on a consistent basis. And if I put that together and look at the move in euro-US dollar yesterday, again, these are the extraordinary moves that then destroy a positive trading performance of many retail traders because they don't honor their stops and they don't honor their money management. And to come to one very practical example that I'm using with my trading students quite successfully, and it is also something that has been featured by Mark Douglas in his book Trading in a Zone. If you want to improve your performance and you struggle on the emotional side on trading, executing your strategy side, why not go with a very small position size and trade your next 20 or let's say 40 trades, just looking at your quality of execution, not really caring about the points, the profit or the losses, just looking at, have I executed in line with my rules? Have I traded the markets I want to trade? Have I defined my entry, my stop loss and my target before I went into the market? Did I go into the market when and I wanted to go into the market, and just evaluate your performance based on have I executed well or not. And then after, let's say, 40 trades, just look back. Have you been able to execute 100% of your trades in line with your strategy? Yes or no? And if the answer is no, and it typically is no, try to find out what was off and try to root cause there. And this is where you need to then improve your strategy. But please don't trade full size. This is something, go with the smallest position size you can with your broker into the market and run that as almost as an exercise if that's something you're struggling with. And you will be amazed how that will kind of, it will immediately remove the pressure of winning or losing and introduce more rigor around disciplined execution of a strategy. And then you can probably turn back to your normal position size and you can have taken some interesting and good steps towards removing challenges around execution, just as a practical exercise.
Yeah, what you're mentioning there is really critical. At one point, when Dennis and I were trading in an office together, we probably had, 25, 30 traders in there, and, someone would get, in a cold streak, and, that would be the first thing I would say. Cut back your size. Make some winners, and because the human psychology is, well, I'm losing. I got to get it back. Trade bigger, and it's really at those times where you have to take a step back and trade smaller, do the executions, and then if your strategies are truly good, then you'll regain your confidence. But that is something that it really takes a lot of discipline. Sheldon McIntyre is asking if you work on traders one-on-one, does the Leadership Council provide such a service?
Yeah, absolutely. We do that. I have a bunch of professional traders I'm working with, and when we look at who's the best partner for the trader, who would be the most appropriate coach. So if you contact me on my blog tradersleadershipcouncil.com or just Google my name, Malte Kaub, and then you will find the blog tradersleadershipcouncil.com. Just go to the contact page, and I'm happy to get in touch and see what we can do. Sometimes we reject students because it just there's not a good fit. But often we find in most cases we find a very good setup, and then we arrange what makes sense. Sometimes it's strategy, sometimes psychology, sometimes it's something else. Again, this is very personal, so would love to discuss that.
Do you ever try the opposite strategy? Like when you're like in a really bad streak and like you want to buy, you sell instead. Do you ever try that strategy?
That's a very good point. I did, and I lost. That's the honest answer. That's like always like, okay, I have a moving average strategy, and if I'm losing now, if I just turn around and switch selling with buying, then it will work. No, it won't. If a strategy doesn't work in one direction, it doesn't work in the other direction. I can confidently say that.
Okay. Well, we've had Malte Kaub here, and he's the managing director at the Traders Leadership Council in London. Also, you just gave us about as good a breakdown of the European markets and the easing that's going on out of there as I've heard from anybody. Gave me a great education here. We need to get back to the markets because they are tanking as we speak right now. So we'd like to have you on again. Have a good day, and speak to you again soon.
Likewise. Thank you very much. Have a great day.